This presentation is going to deal with the Streamline version with FHA, VA, and USDA. With the FHA Streamline, there's some protection that's baked in the cake that prevents you from refinancing until you've met certain time requirements. So with the FHA, you actually can refinance technically after you've made 6 payments, 210 days. But the got you, if you're looking to do a Streamline, is that your maximum loan amount is going to be limited to a certain percentage, and you won't be able to maximize that full potential appraised value from when you bought the home if you do it at that 6-month time frame. So per my presentation, it's recommended that you do your refinance, especially if you're looking to do the Streamline, after 1 calendar year. If you're looking to do it prior to that or at that 6 months or 6 payments, 210 days, then I would look at doing a full refinance, a full appraisal and things of that nature, because you're going to have a problem with having to bring in a lot of monies. So that's one thing that you need to understand. In addition to the credit and LTV requirements, there's also net tangible benefits, such as lower monthly payments, lower interest rates, or the ability to remove mortgage insurance. And if you're removing mortgage insurance, you're going from a FHA to a conventional, because you probably have that 22% or greater equity position as a result of appreciation and principal reduction as far as the payments are concerned. So that's what you need to know when it comes to FHA from a 10,000 foot view. Again, your lender will walk you through the particulars. What I want you to know is watch the total cost, discount points, and the Section A fees as far as the loan estimate is concerned, because the Section A fees are the fees that we, the lenders, really stand behind, that we can ensure that are accurate. The other things are derived from other parties, and we're given an estimate until we actually get all those numbers in. Moving forward, VA, the VA IRRRL, interest rate reduction loan. Love this one as well. Veterans, you guys have the best loan products, period. Not only with purchasing, but also with refinancing. Shout out to you for the sacrifices that you made. You actually can do it with a lower credit score. Again, you're going to get a mortgage only credit score. I'm only looking at the mortgage payment history. And so I've done VA IRRRLs with credit scores lower than this, but just trying to give a number to hit the masses, right? Again, there's got to be a net tangible benefit as far as lowering the interest rate, lowering the term. If you're going from an ARM to a fix, that might be the only scenario in which your payment might go up, but there's only a certain amount that it can go up. Because if you think about it, going from an adjustable rate mortgage to a fixed mortgage is a benefit because you don't have the potential fluctuations. But even with that, there's only a certain dollar amount that the payment can go to when you're going from a variable to a fixed. Your lender should know those things. What's some other benefits? Yeah, with VA, you don't have any mortgage insurance. There's no mortgage insurance associated with it. Time requirements, again, 6 months, 212 days is the least amount of time. Unlike FHA, you can go with that 6-month time frame. The key with the VA Streamline Refinance, the VA IRRRL, interest rate reduction, or aka Streamline Refinance, is that you have to be able to meet the 36-month recoupment calculation. And that's where things might get a little sketchy. Not necessarily for you, but for your lender. They have to explain that to you. So there's only a certain amount of fees that can be passed on to you that have to be recoupable within a 36-month period. And the way you get that calculation is you look at your principal and interest that you're paying now, the proposed principal and interest, that difference in that payment divided into the calculation of the fees, because all fees aren't added in, but that has to be zeroed out by 36 months or less. If not, you can't do it. So with FHA and VA, great options because we're only looking at the mortgage credit. In both cases, if they're done right, you shouldn't have to do a new appraisal because we're using the appraisal value of the purchase of the home. Okay. So point I want to make is You want to make sure you understand the total cost, and it's got to make sense. Even if 36 months, it might not make sense to do that deal, or another lender might have lower costs with the same rate or lower rate. That's why you have to understand these things and shop to make sure you're getting the best deal. That's VA from a 10,000 foot view. Moving forward, last but not least, USDA. They also have a streamlined version. You got to be you have to have made 12 months worth of payments. Again, just looking at the mortgage only credit report. Okay. 640 is a good number for the middle credit score. And then those scores can dictate what interest rates are. I've really seen that with USDA refinances because in essence, it's a conventional loan that has a rural component that allows folks to finance 100% if the house qualifies and the income is in line. There's also a net tangible benefit feature with them as well. You have to have made 12 consecutive months. Those Section A fees from the loan estimate is really what you're paying attention to make sure that the rate that you're getting, the costs are in line, or you might be able to go to a different lender, get the same rate or better with lower cost. Okay. So the thing is, when it comes to the refinance, you really need to check around, not only for interest rates, but you also have to know and understand the professional that you're dealing with understands the program. Let's move forward. Now, advantages of doing a streamlined refinance are this, right? Obviously, you're looking for a lower monthly payment. There's got to be a net tangible benefit. In my opinion, if you're not getting a 0.5% decrease in your rate, 0.5% or more reduction in your interest rate. A lot of you guys have heard 1%, 2%. Nah, that might have been years ago, but now we have 0.5%, 5/8.625, 7/8.875, up to 1%. That's huge now. And so to be more realistic, it's a 0.5% to 1. Anywhere in there, you should be winning, right? If it doesn't cost you too much. It's a faster process. Why? It should be faster because you're not having to get an appraisal. That's what takes up a lot of time. And when I say a lot of times, it could be, 3 to 10 days, depending on where you are in the country. That's why it's faster. It's less documentation. We don't have to validate or verify income. We do validate or verify that you're still employed. We do a verbal verification, but we're not validating or verifying income and things of that nature. We're really basing it on the last loan that you did, if everything lines up. And that leads into less paperwork, right? So what do you need? If you're one of my past clients, a lot of this stuff you don't have to worry about because we've set up a refinance strategy when you bought, okay? And so we have a lot of this already put in place. But if you have not worked with me and you're dealing with another lender, or if you just went to anybody, a bank or something of that nature, you're not going to get this type of service. So you need to put your hands on these things before you apply. What things am I speaking of? Your most recent mortgage statement, and get a payoff that's good for the end of whatever month that you're in. You want your declaration page for your insurance or your proof of insurance. Your declaration page is going to show the lost payees, who would get paid, or it's going to show the name of the servicer that you're currently paying, the effective date of the policy, and a lot of times whoever your agent is. Your lender's going to need that as well. Your survey, if you're in a state that has a survey, it's a good idea to have that survey. And if you don't know what that is or where that is, you want to identify that survey and digitize it, put it somewhere where you can put your hands on it. Because if you ever sell your house, that survey is a piece of paper that's anywhere from, well, nowadays, heck, it's $600 and up. I've seen them as high as $3,000 on some big deals that I've done. But you want to know where that is. So survey, if applicable, depending on where you are in the country. Your mortgage note, not your mortgage statement, not your payment, but the note. When you sign those papers, either it was given to you digitally or you have a stack of papers, but the actual terms, the note that you sign where it shows your loan amount, the interest rate, and then all those pages, it's 1 to 4 pages. You want to have that. Your identification, obviously, the most recent ID cards, and then how to contact your current employer so that your lender could get a verbal verification of employment for you. So if you have those things, that should expedite this process really quick, and you can streamline, refinance your way into a better payment, because we are at that time where rates are starting to come down. Say you're already in the process of doing a refinance and you want a second opinion, click that QR code there, follow the instructions, and we will get you a second opinion. This is a service that I'm offering to make sure that you're getting the best deal, because I see a lot of people get taken advantage of because they go to one place, or they've heard a slogan about somebody being better than somebody else, or you go to your local bank because that's all you know. If you like a loan scenario here, and then if you want to consult, meaning we have a 15-minute conversation to see if we're a fit before you actually apply, right up here, baby. Loan consultation. So there you have it. Wanted to give you a 10,000 foot view of Streamline refinances. If refinancing is something you want to do, you will not be disappointed if you reach out to us. I guarantee. We'll see you soon. Peace.